Well, once upon a time, Zynga got a halo from being associated with Facebook. Now, not so much. We've got George Stahl here to talk about that on the set. Thank you very much, George.
How are you?
I'm good. And you?
I think you would do a good job drinking beer and hosting Digits.
I think I would. It would have to be a very large beer, though, in that case. It would have to be absolutely enormous.
It is a 20-minute show.
Yeah, it would have truly gigantic. So tell us about Zynga. I mean, Zynga, you know, we're going to have a look at its stock price in a moment, but they up 2.9% today, which is pretty good. But if you look over a longer period, it hasn't been doing so well.
Yeah, it's down about 40% over the past month and a half.
Yeah, and part of that is when we got some information from Facebook's filing. Talk about that.
Yeah, so Facebook, back when it had its original IPO filing back in late January, early February, noted that Zynga represented 19% of its revenue in 2011. That got people really excited about the company, even more so than it was already. Stock shot up. Then, though, since then, we found out some more information that's gotten people a little bit more cautious about the company.
Which is now down to 15%.
It's not right. Facebook came out this past week, said that it was 15% of the first quarter. So, you know, its dependence on Facebook is weakening. Last month, also, some of Zynga executives, including the CEO, sold some shares. So people were thinking that might be an indication that maybe they know something, trying to get ahead of the Facebook IPO, trying to get ahead of any sort of first quarter results. And also there have been some analysts that have suggested that the number of users has declined on some of Zynga sites.
Now the gaming business is a very tricky business, and we know that because we've seen it in others. You know, with more big games where you pay $60 for, unlike the Zynga games, which are basically free and you can spend a few pennies if you want to. But it's still hit-driven, isn't it? If your game is not a hit, people stop playing it, and then and they go in and out of fashion. Isn't that part of the problem? And presumably investors knew that.
Yes, yeah, no, it's one day you're in, the next day you're out, as somebody says on TV. And so what you can easily see is a game that was once popular lose its cred with those people. That's why Zynga bought OMG Pop with the Draw Something game, which is becoming a huge hit, where people draw pictures in sort of a Pictionary type of style with friends on mobile devices.
And that seems to have done very well. And we got a picture of that there. A lot of people love that, but that need to have constant hits after hit after hit after hit, that's going to be a problem for Zynga, isn't it?
Yeah. It's very easy for people to jump onto to another game that will get their attention and, more importantly, get their money.
Yeah, getting their money is the name of the game here.
Yeah.
Now we wish Zynga good luck, but obviously the investors aren't that thrilled with it at the moment. I guess that's the way it goes.
Yeah.
It's risky. It's a risky business. Thank you very much, George Stahl of Dow Jones Newswire. You can check out that story on Market Watch by Dan Gallagher. He couldn't be with us today.